The FOMC meeting concluded today. We need to talk about it, especially how to capitalize on this market environment. I am Dr. Stock, Doctor of Education, and a shrimp would never share this information with you. Why? Because they tend to be a little shellfish. All right, all jokes aside, watching the SEP come out when it did at 2 o'clock, that was a big thing. And exactly what I thought was going to be our issue ended up being our issue. Then Jerome Powell came out and spoke, and he didn't make it any better. So I got to give some detail on top of that. And I will be telling you later about the Moo app and here, how you get your free stocks. I'll tell you about my Patreon and its options course. But for right now, we got to get to talking about the FOMC and what they gave us with the summary of economic projections. And what I said about it was we want to see where they drop us for the terminal rate. So how high they're going to make the federal funds rate for the end of 2023. If it came at 5.6, that could be upward pressure. If it came in below 5.6, that would be amazing. The markets would rally significantly. And then looking at it 2024, if that was even or lower, again, market rally. If it came in higher, that could be something put downward pressure on the markets. And that's exactly what happened to us. They gave us downward pressure by coming in at 5.1. Take a look at this. Let me put that up there for you so we actually have some numbers to look at. There's the 5.1. This is 2024, the terminal rate for the federal funds rate. So the median projection by the 19 voting members comes in at 5.1, whereas before, back in June, it was 4.6. So last they told us in their summary of economic projections, they said 4.6. So from where we're at, we could say, okay, so we're going to take 4 25 basis point rate cuts. Instead, they knocked it down to 2, and the market did not like that. And then you look at 2025's number, that also is 50 basis points higher than what they were projecting in June. And the problem with that is that they have been saying about higher for longer. And so we thought we were looking at higher for longer. And then they come out and like, no, much higher for longer. So that wasn't very nice because we already know they have said that they are at restrictive levels and that we have significant credit tightening. And what do? They're like, you know what, we're just going to keep choking off the economy in the meantime because we really need to see it crumble to be sure that inflation is beaten out before we go ahead and start to really loosen things, monetarily speaking, by the federal funds rate. And I'll tell you, I wrote down a quote from Jerome Powell, and I'm going to hold off just for a minute. I'm going to hold off on telling you the quote that really upset me. So, I mean, just markets aside on this one, he said something that really made me feel like he was out of touch. And we'll get to that in a moment. And for right now, let's just look and see what the market did, how the market responded to it. So here we go. Here's the intraday on SPY, which tracks the SPY. Oh my goodness, it tracks the S&P 500. And right here's the 2 o'clock hour, and you can see the drop that we took. That's pretty typical. You can see we bounced back up. That's also pretty typical. And then Jerome Powell spoke, and man, oh man, he didn't make it any better for anything that he had to say over these several minutes here. And then afterwards, the market also decided that they didn't really care for what it was that he had to say. And pretty much comes down to the fact that even though that they might have one more rate hike coming, the worst part of it was the higher for longer, just how much higher for longer they wanted to make it. And here's the part that really steams me, and we'll get back to the chart. He said, and I quote, households are in good shape, referring to the wages and the fact that real wages have outpaced inflation. And I can tell you that he is out of touch, maybe for the upper middle class, maybe for the top 10%, maybe for the top 1%. Maybe those households are in really good shape. For the people below that upper middle class, I would say the middle of the middle class and below, people are feeling the pinch and they're sweating this. And I'll tell you what, not only do we have the prices that are already high feeling the effects of inflation themselves, they can't really borrow money cheaply anymore to even really help with that. And then student loans are coming due for those people who have those student loans. That's going to be further pressure on it as well. And just it's all in all a problem for those people. Households in general, I wouldn't say are in good shape. I would say that some households are in very good shape, the ones who stood to capitalize. But I'll get off my soapbox for that one for now. We'll get back to the markets here. I just hate to hear that kind of stuff. So here's what the SPY looks like. And you can see this pattern that I have drawn on here for you. And then I said falling out the bottom of this like we did on Triple Witching Day could show further softness in the market. And that's what we got in the FOMC meeting, as I thought. Did not really help us out in that he did not tell us anything that was going to be good for us. And so that's what we have. And where does it take us from there? Well, we could easily see 436 coming out from here. It's also possible that tomorrow, after a strong sell-off, that we go back and retest 440, maybe 442. But I do think that we continue a little bit in a downward direction on this one. The biggest tell is going to be that 50-day. So keep your eyes on that. It's right at about 446. So if we're able to break above that on good volume, then you can ignore what I said. It's canceled, and then we can start looking for 448, 452, and beyond that one. So that's what we had to look forward to, but I do expect that we're going to get a little bit of further softness from here, and I am positioned to take advantage of that. So let's go to the Qs real quick, just to show you it's pretty much the same as what we had. And if I go to TQQQ, it's a T with 3 Qs. I don't know how many I said. It's so confusing. So this one, very similar chart. I don't have any technicals drawn on here because I use the Qs to do that instead. But I will tell you that not only was I set up with some put option positions on this that I've made significant alpha on over the past few days, expecting that weakness to come out and watching the charts play out and really doing my homework having paid off. I do expect this thing to also further sell off because I expect the NASDAQ to sell off. So should we see that, this is something that should, with the existing puts that I have, continue to print for me. Even if it's not tomorrow, I expect that over the next several days that we see a little bit more softness coming in. And I think that bounce really coming in when we hit about $35-ish per share for TQQQ. And if you go back to the Qs, which tracks the NASDAQ 100 for a moment, this one dropping down to possibly, well, first, let's go to this one at first, that we could stop by 362, we could stop by 357, and we could stop by 354. And what we do not want to do is lose 354 because then that real pain starts, and then we have a pretty significant way to fall from there. So I would say from there, 345 would be our next stop. So we don't want to see that. We do want to see to the upside. But like I said, that 50-day is going to be our contender, and also trying to cross back over the bottom of this trend line here that now acts as resistance instead of support. Since it's been broken, that's going to be trouble. So TQQQ. Sold a lot of puts on it, cashed in a lot of puts, still have some puts on it, and I still think that there's some room that this could go, and that's why I didn't close out my position. Now, some other ways that I've capitalized, and I will continue to capitalize. I had an intraday play with some put options on Google. Finally broke down through our rising wedge on this one. That worked out very well. And so the intraday play worked very well. I took out another position with a 137 strike. I believe it was October 20th was the expiration. That one is still open. And so is my original one, which I believe was from September the 15th is when I opened it, I think. Don't quote me on that one. I'd have to check my transactions. But that expiration is also October the 20th. That one is 140 strikes, so that one has already moved significantly. I was actually going to close it out today when it was about 20% up, but the market closed before I got the chance. I don't think the opportunity's missed, though. I think that tomorrow could still print for us very well with Google. I think that we just started a little bit of our sell-off coming out of this formation. If we go back to look and see what that looked like back here when we had 2021's help into 2022, you can see the sell-off that we had and what continued, and that's why I wanted to give myself a little bit more room, and I do think that we have room down to about 132 should we get there, and if we do break that, then we have room down to about the 50-day, which is currently at about $131 per share. Now, I do want to share one more with you because this one makes me nervous. I got to show you guys this one. So here, this is end phase, and the magenta that I have drawn on here, this is showing bullish divergence between the falling price action and the rising momentum on end phase. Should the RSI cross over 50 on end phase, I think we have really good confirmation that we crossed into bullish territory, at least for the short term, because you'll see the long-term trend is bearish, and that would be trading against the trend, and man, that is a nerve-wracking thing. If end phase was already overall bullish in a bull movement for the trend, then we could experience some serious upside from a bullish divergence like this, but that result could possibly be muted by the fact that end phase itself is bearish, and then also if the market does continue to sell off, that could also mitigate the results here, possibly even cancel them altogether. But just in case it doesn't, just in case the RSI does cross over 50, I want you to know, this is my service to you, I want you to know that we could still possibly cross 132, and if we cross that, very well, momentum still pumping, then we could start to see 140, possibly even 142 coming out of this. So I think end phase is very much keeping on your radar for the short term, and sometime over the next 6 months, I anticipate us to find bottom for end phase if we haven't already found it, and you can watch for times of consolidation for that to happen where we have mostly sideways trading and low volumes, which you can argue that we actually had a period of consolidation happening here with a little bit of volume pickup. I think it was just getting started. Hopefully the market didn't cancel that rise. We'll see that. I do have a call option purchased on this one. All right, so in terms of adding alpha to your portfolios, is the offer for Moomoo to get 16 free stocks. Sign up, get the platform. I have been doing a lot of my trades over in there, especially my options plays. And if you use my link down in the description, you get 5 free stocks for a $100 deposit. $1,000 or $5,000 deposit gets you 15 free stocks and a free share of Tesla or Google at that $5,000 deposit level. And they do have advanced options trading strategies. And that leads me into my Patreon. If you want to see the buys and sells, how I'm playing the different stocks and the stock market, come on over because I do post my buys and sells over there. And I'm in the Discord throughout the trading day where you can talk to me and my other community members. And that place has been on fire recently, not only with talk, but also what inspires that talk is all the gains that we've been able to capitalize on through the different trades that we've been making. So portfolios amplified. This is my options course. If you want to amplify your portfolio, that is part of the Patreon. So you can go over and you can get a hold of that course that you can learn it from a very beginner perspective on options. It starts off very plain English, not a lot of vocabulary, very clear, concise videos. Some of them are even under 3 minutes for the few of them that are up there right now. There's a few of them that are a little bit longer than that when you look at them, but I will be adding to that over time. Anything to squeeze out every last ounce of value that I can for you guys to return in multiples what you would do from your investment by signing up for the Patreon in the first place. So guys, just to summarize, how do I feel about the markets right now? Short-term bearish on the markets. I think they're going to soften a little bit more at least, and we're going to have to replay from there before we see that next big rise coming up where we cross the 50-day again and that we head back in a bullish direction. I think we need a major catalyst to take us back up, and that can happen in the form of jobs reports where jobs start to get softer, but not so soft to the point where we start to see massive layoffs, because then that signals recession, and then that would be something that would cause the markets to tank. And then also inflation reports, we want those to come in as soft as possible, close to zero, not to the point where it starts to signal deflation, because again, that would be a recession, but I don't think that would be the first indicator that we would have. So instead, just keep your fingers crossed and keep on the lookout for those low inflation reports. We do have PCE coming up next week, I believe. So be on the lookout for that coming out. That is the next inflation report that we get, and those things can act as market catalysts, and they can absolutely turn things around for us should we get the right numbers. But I have gone along quite a bit in this video, so I do want to wrap it up for you guys. Thank you for watching. Hit the like button if you like the things that I have to say. That Patreon, tons of value over there, especially through the Discord and also those options courses as well. I'm excited to be building it out, and I can't wait to have the finishing touches on it for everyone so that it can provide as much value as possible. Get your free stocks from Moomoo. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and I'll see you in the next video.